Thank you. Mr. Capito?
Thank you. Thank you, Mr. Chairman, and welcome to the Chairman. I apologize if you've already answered this question. I had to slip out for a little bit. Kind of conflicting information. I've heard, and there was a news report, I believe, in December saying that $1 trillion is being held in cash on hand by corporations and companies and investors are kind of hunkered in a savings capacity. But in your report, it says that the total net national savings still remains low by historical standards. So my first question is this phenomenon of companies and investors holding their assets, is it large by historical perspective, or is it lower? That's just kind of a quick...
Well, it's a question not of the new savings being done, but of how the overall existing wealth and what form it's held. And firms have taken advantage of low interest rates to pay off debt or refinance debt, and they are holding an awful lot of cash relative to longer-term norms.
Right, and then, you know, in terms of job creation, obviously, if they let go of their cash or reinvest, that's going to create more jobs and more expansion of our economy. And for instance, in my state, I'm from West Virginia, a lot of our investors are kind of hunkered down because of the regulations regarding our fossil fuel industry, the uncertainty of where we're going to go with that. Do you see this as a problem in terms of the rulemaking that's going to be continuing on Dodd-Frank for the next several years? Do you think this will cause financial institutions and other investors to kind of hunker down on their cash and not spread it out to create the jobs we desperately need?
Well, there's two schools of thought on this. One is that we should delay in order to get, you know, further information, and the other is that we should do it as quickly as possible to get past the uncertainty. We're trying to do both. You know, the Dodd-Frank Act put some pretty tough deadlines in terms of how quickly we're supposed to get this done, and we're working flat out at the Federal Reserve with over 300 people working on these regulations, and we'd like to get them done right, but we'd also like to get them done quickly, and we appreciate that uncertainty is bad for business and bad for lending, and the sooner we can get a clear set of rules on the table, the more quickly the firms can go back to business.
Right. My other question is, I ask on my e-newsletter, if you could ask a question to your member of Congress, what would it be? And normally, it would be around a lot of different issues, but the debt and deficit issue, the very simple question they ask is, what are you doing up there? Just printing money. You know, not understanding the process. So I'm going to take us back to the beginning process. In your report, you've said that federal debt has risen, but the demand for our securities is well maintained, particularly foreign custody holdings and foreign investments on the auction. The next question people ask is, well, who's holding our debt? What countries? And Mr. Lynch mentioned this, that China is holding a lot of our debt. So we're not just printing money, we're creating debt, and it's being held by foreign countries. So what would you tell somebody in a very simplistic way how that is going to affect our national security, our trade, and our ability to move forward?
Well, as you say, what we're doing is borrowing and giving IOUs, Treasury securities, which say we owe you a certain amount of money, we'll pay you back with interest. At this point, both foreign central banks and investment funds, and as well as domestic investors, seem pretty content to hold that debt for relatively low interest rates, 3.5% for 10 years, for example. So that shows that you know, there's still a pretty good willingness to hold U.S. Treasury securities. That being said, what I've said a couple of times today in the respect to questions about our deficit situation is that we do need to move to provide confidence to lenders that we will control our deficit over time so that our borrowing needs won't explode.
Right.
And if we can do that, then perhaps we can continue to borrow at reasonable interest rates. If we can't, then the risk that we're taking is that interest rates would spike up, and then we would be in a really bad situation because not only would we have a big deficit, but we would also have to pay more interest, which would add further to the deficit and give us in the kind of a vicious circle. So It's just like it's just like borrowing, and like any unit, firm, or a family. If you borrow more than you can repay, then eventually you're going to get into trouble.
Right.
Thank
Thank
you, Mr. Miller.